Is it time to sell it all? The S&P is now crash landed right back in our previous all-time high. And at least for today, there are fires out there. And the market appears like it's in a sell first and ask questions later mode. Unless you're NVIDIA. Whoa. And the bears are out of hibernation. They are loud, they are proud, and they're pretty hungry for good reason. Why? Let's look at year to date. Plus 11%. A year's worth of return so far this year. In the last year, plus 28%. In the last 5 years, plus 86. If we go to max, which goes back to 1993, it's 1,100% gains. So these bears are hungry. They are angry. But let me ask you this. Do you make good decisions when you're hungry and angry? I don't. So here's what I want to see from the bears, and I will update you on today. The bears have a theory that the big crash is here. The question is, what are their assumptions and what proves them wrong? All right, so let's go through and talk about that right now. In terms of evidence for the bears today, the first thing is that we do have a bearish engulfing daily candle. But here's the flip side. Unless we fall below our previous all-time high, we've built ourselves a very nice staircase of support here, which means we could drop by roughly 5% and that would still be fine. But here's where it gets interesting, because if we look to our algo, it tells us that we have a inverse signal for the Dow Jones, the S&P, and the NASDAQ on the one-day time frame, or an opportunity of roughly 3 weeks. The risk reward's pretty good too. It's roughly 1 to roughly 4. I bought 2 of these, by the way, yesterday and today. So what this basically tells me is that we have a whisper alert. We're looking for follow through. The follow through for me would be very simple. It means we close red tomorrow. We got to close basically below the previous all-time high. If that happens, hey, I'll update you on it. That's what we're looking for, though. We could potentially crash for up to 3 weeks, maybe even a month. So what that would basically mean is that we have to come back down to our monthly higher low and lose it. We got to print a monthly lower low. Until then, we're over the previous monthly high in blue sky territory in a bull market. Why? We're 20% off the lows. That's the definition of a bull market, in case you didn't know. So for the bears to really win, we have to drop by 20%. That's how we go into a bear market. Hindsight's always 2020. But look, massive gains. So let's go through and tell the story now. So my system has been looking for this alert for a while, but we need to see the alert tomorrow for it to be optimal, which means we want to be red again tomorrow for the bears. Here's another one that had to sell first, ask questions later. Ether, down, and then right back up. So just because you get a knee-jerk reaction lower does not mean it will hold. All right. And that's because Ether, at least for now, we don't have an official release from a trusted source, but here's a screenshot that says that the SEC has approved spot ETFs to list. All right. Whoa. But crypto is not the stock market, Justin. So tell me the story about the stock market. All right. Just before we do that, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate it. All right. Well, I talked about it. Jerome. All right. Here, buddy. Here's my bull thesis. I told you what's bearish. I told you we need more evidence. We need more. Here's what we have so far. We're up 11% so far this year on the S&P. We're up by 12% on the NASDAQ. That's pretty good. The bears might be right now, but man, they missed out on a lot of gains. That's a year's worth of returns in like less than half a year. This is what it comes down to. Are you going to fall into bucket number 1 or bucket number 2? That's all it is. Are you going to regret or have FOMO on number 1 or number 2? So I've told you about my theory as of December 30th of 2023. I made some assumptions. I also told you what proved me wrong. And we failed to hold the higher lows, which means I'm unsure. This is a monthly pattern. We've not yet closed out the monthly chart. What does that mean? We don't know for sure. I wish I could tell you what's going to happen on June 1st and this candle closes out. I can't, right? I'm not Nostradamus. People in the comments will know everything. They're smarter than me. Listen to them. But anyways, let's go forward here. So in terms of assumptions, here's what I told our group on May 4th as we opened up a new month. Both the S&P and QQQ closed below last month's low, which is a potential trend change. One candle lower low is not a trend change. What this means is that we're in a yellow light or an inside bar, which means caution. That's why I've been cautious lately. If we fall below and lose the red light at 494, which I basically just showed you here, means that we print a second monthly lower low and close below it. What does that mean? It means that we're breaking down further, 2 times lower highs, 2 times lower lows. That's the start of a trend change. However, if we reclaim the green light, which is at 525, it was likely just a dip or a trap, and we're likely back up in all-time highs. Well, that's exactly what happened. We're back up here in all-time highs. We're up by 5% on the month. Okay, so that's your monthly plan. Now you talked about the weekly and the daily. Here we go. Here's my update from the 20th. S&P and QQQ, not much to update on. It's bullish. It's just a matter of how bullish. The monthly and annual are in higher highs over the previous candle high or in a green light. Green means go. Hollow candles are bullish. Warning, below last week's high or a yellow light. That's 531.52 and 454.69. That did happen. I also talked about it yesterday. So the bears do have some more evidence here. They have a failed break, which means that we're below the previous candle high. We have a higher low, a higher high, but we failed to hold it. For the NASDAQ, same thing. It's just below the previous weekly high. By about 1 point. So if we think about that, we have higher lows and higher highs. Are higher lows and higher highs really bearish? No, they're not. But here's what's really important. I'll make it really simple for you. So I talked about this morning. It's a really simple analogy. Actually, I want to pop over here to my next section here. So I'll get to that in a second here when I look at the next chart. So if we think about this, the 100% chance means that we need to zoom out and look where we're going to be in roughly a year from now. Let's look at the heat map. Because a year ago, you could have said the same things, right? Banking crisis, blah, blah, blah. All these reasons to be bearish. Oh my God, it's like a bull market. 240, 80, 40, 30, 10, 50. Yeah, it's bloody on the one day. But let's zoom out. Let's look at the last month. All right, looking okay. Let's look at 3 months. Okay, still a little bit mixed, but broadly up. 6 months, mostly green. 1 year, up. Market likes to go higher, in case you're not clear. All right. So if that's where we're normally going to be 100% of the time, you're betting for the end of the world, right? You're betting for a major disaster. How are you going to cash in? I don't know. There's no one going to be left to pay you. Now let's look here at more evidence. So to make this really simple, I've gone through this pattern before, so I'm not gonna beat that dead horse. But here's what I want to focus on. If you've ever played a sport, how do you score points? Well, there's 2 ways you can do that. The first, actually, there's only 1 way you can do that. So if we look here to the chart, higher lows mean the bulls are playing defense. They are defending the chart at a higher level than they did in the previous candle. That's defense. But how do we score points? We score points by going higher, which means higher highs. So higher lows and higher highs over previous candle highs means that defense is winning and offense is winning. If we look to this pattern, it's really simple. And I know people are going to say it's not the same as 1995. They're going to have all the reasons to be Debbie Downers, cup half empty, blah, blah, blah. But here's what I have so far. Once we get to here, if we followed my pattern, which I laid out for you here, I talked about what proves me wrong, a monthly lower low closing below the low. And I also said that we need to see a second one for a potential trend change. A confirmation would be on 3 lower highs and lower lows closing below the low. But to make it really simple here, I did this before, but let's do it again. If we just listen to that one pattern, which means not we have a theory, right? Like men, we think, right? We think we're smart. We know where to go. We big bear. We make money. Well, look, 1 lower low, didn't even close below. All right, 1 happened here, 1 happened here, and 1 happened here. Well, in the meantime, you missed out on like significant upside. You missed out on like hundreds of percent. So if we look here till we got that one over here, and then we really start going sideways, plus 170%, plus 220 to the high. So if now we think about where we are today in the 2020s, do we have anything to prove us wrong? Well, this candle's not closed out yet. So if it goes all the way down, it slams down, I don't know, like 5% in about a week, hey, I'll flip. I have no problem with that. I'll flop, actually, right? Flip means up, flop means down. But until then, if I keep seeing higher lows and I keep seeing higher highs, you're probably not going to be surprised. I'm going to be bullish. So I told you that our system is looking for us to go lower, which means the NASDAQ, the S&P, and the Dow are currently overbought on the 1-day time frame. I also walked you through what that would look like here if we actually dipped. The S&P could drop by 5%. We could get another dip. And that would still be a monthly higher low. Our low right here to fill the lowest gap is at 512.55. Sorry, 505.84. Okay. What's the low from this month? It's 499.55. If we stay over 500, we don't have a monthly lower low. The bears are angry, right? They're hungry. But are they correct? I would love some comments. I would love for some bears to tell me what their assumptions are, what proves them wrong, and where we're going to go. That's what I need to see. Otherwise, I'm going to assume I'm right. Why? I got evidence. Evidence tells me that, at least for right now, I am seeing everything I want for this pattern to continue. All right, 2 more quick updates here. We did talk about some bearish charts. So we talked about how this is RSP, looks like a monthly double top. If we look to XLV, also looks like a monthly double top. Same thing here for CAF and also for XLF. So by the end of the month, the S&P is made up of a lot of companies, right? S&P 500. So I look at SPY because it encapsulates every sector, every group. NASDAQ strong, some other sectors weak. So the market's not going to rally unless we get some broadening out. And we do need to see new all-time highs from most of these ETFs. On the flip side, the ones that are winning are the Dow, the New York Stock Exchange, RSPT, or equal weight technology, the DAX, the S&P, and the NASDAQ. So that's pretty much it. I told you my theory. I would love some comments to tell me whether or not you agree with me, disagree with me. And if you want to smash a thumbs up and subscribe to the channel, that would be great. Watch the video on the left or tune in with me at 9:15 and 9:30 tomorrow as I go through more charts. Thanks so much for tuning in. I'll see you on the next video.